What's up, millennials? So in the last video we talked about what a SPAC is, and also we talked about who the people are behind Switchback Energy Acquisition Corp. Now in this video we're actually going to take a look at why Switchback Energy chose ChargePoint for their acquisition. And for that we're going to use the investors presentation which was published on the website of Switchback Energy. Now, I'm probably going to make 2 or 3 videos about this investor presentation because there is a lot of information packed in there, so a lot of things to talk about. Now, in this video, we're going to take a look at the summary, the market, and also the business model. So let's get started. Okay, let's first take a look at the transaction summary. And as we can see over here, this is already quite important. This is already pretty much the summary. Switchback has identified ChargePoint, the #1 brand in EV charging, as the company best positioned to continue leading their growth in charging infrastructure required by the world's transition to electric mobility. That's pretty much the summary of this entire presentation, right? Okay, so let's take a look at what they say over here. The first point is that it was founded in 2007. So ChargePoint founded in 2007. For me, that's already a very important note because, in one of the next videos, we're going to talk a little bit more about ChargePoint itself and also the team behind it. But 2007 indicates that they really know what they're doing because they are already 13 years in the field. So they probably have a pretty good idea of what they are talking about, right? And then it goes on and they say that ChargePoint has built one of the world's leading electric vehicle charging networks. Then here we can see that ChargePoint is to be capitalized with cash necessary to bolster positions in existing markets and to fund European growth, and ChargePoint as a service and hardware and software R&D, which is research and development, right? So that's pretty much an important note as well. They are going to bolster their positions in their existing markets, which right now is mainly North America, as I've taken a look at that. And they want to fund European growth because what I've also seen is that, they are present in some European countries, but not that present just yet. I think there is still a very big addressable market here in Europe. So we're going to take a look at that later on as well. And over here we can see under the valuation part that the enterprise value is valued almost at $2.4 billion. And what they also say is that there is an attractive entry multiple relative to the electric vehicle ecosystem. Then let's scroll down to the investment highlights, which are on page number 8 over here. So here we can see a few things, right? These are pretty much the highlights of their investment. And let's first take a look at this part on the left-hand side, which is that there is a massive total addressable market. First of all, they say, electric vehicles are projected to be 9.9% of new vehicles sold in 2025 and 29.2% in 2030 in the US and Europe, which is compared to a 2.6% in 2019. So we can see that, in about 5-6 years' time, the addressable market is pretty much going to quadruple, right? From 2.6 to almost 10%. And if you take a look at 2030, it's more than 10x. It's like 12x in a little bit more than 10 years' time. Now, I personally believe that these numbers could even be bigger because, that especially is going to happen when the big car makers are going to be making more affordable cars, right? Because, that's exactly what Tesla is trying to do as well. And also especially when they, or at least people like Tesla, companies like Tesla, roll out their autonomous driving network and ride-hailing network. In that case, you can buy an electric vehicle and let other people use your vehicle, use your car when you don't actually need it. So that way, What you could do is, well, simply use your car as a type of investment. And, well, if that works well, then you could earn money by buying an autonomous car. Then it would be almost stupid to not buy one, right? And if you don't drive a lot like me, well, and if you also can't afford an expensive autonomous car, then you probably won't buy a gas-powered car anymore, because you're just going to use a ride-hailing network to borrow a car for one day, for example. Anyways, I think I'm digressing, so let's get back to the presentation. So here under the winning business model, we can see that as EV penetration grows, we grow, right? So basically, if you're buying this stock, it's basically a bet on the electric vehicle market. And under this business model, it also says that they are going to have, or they already have, a vertically integrated, complete portfolio of networked solutions. Under these strong competitive modes, we can see that there is a significant level of capital raised to date, which has powered their differentiation, mainly in the research and development part. So that basically means that there is a quite big gap between this company, ChargePoint, and other similar companies. ChargePoint seems to be ahead of these similar companies. This is basically what they mean with the part of the differentiation. And then under the part of the strong capital light growth, there are some very interesting parts as well. First of all, we see that there is minimal capex required to scale, which is already quite important, and later on we're going to see why. They're also going to have recurring revenue streams, which provide strong financial visibility. And small spoiler alert, those are basically the software subscriptions. And the last part, of course, is very important for investors like you and me, that the company revenue grew 60% year over year in 2019, and it's projected to grow at 60% compound annual growth rate from 2021 until 2026, which is pretty insane, right? That's basically 60% growth per year during 5 years. Okay, let's take a deeper look at that growth, right? On page 11, we can see over here that ChargePoint's growth is directly proportional to the electric vehicle penetration. So basically, if the EV market goes up, well, ChargePoint goes up as well, right? If we take a look at the graph over here, we can see that these blue bars over here are the ChargePoint annual sales, okay? And this blue line, the light blue line, is the passenger EV sales. And in the previous years, from about 2011 until 2019, we saw that when the passenger EV sales went up, the ChargePoint sales went up as well. It was pretty, exactly what they're saying over here. It's proportional, right? The more it goes up in passenger EV sales, the more ChargePoint sales go up as well. And right now, during 2020, we see a small decline, which is mainly due to the COVID-19 impact, of course. But after 2020, they do expect a very big growth path, as we can see on this graph. If you take a look at the ChargePoint annual sales in 2020, we can see that, well, it's about 30,000 more or less, a little bit lower than that. But if you take a look at 2025, in 5 years' time, that's around 110,000 sales, right? So that's about 4x the sales it is right now. And well, I personally believe that this graph is kind of on the low end still, because as this presentation says as well, there are a few tailwinds that could occur. And tailwinds in this case basically means, well, if these things that are over here, these 5 points happen, then it's likely that these EV sales are going to be even higher. So what are these tailwinds? Well, possible fossil fuel bans. So if certain cities or even countries ban fossil fuel, then EV sales will grow more than expected. Also, the transit electrification dates. if public transport is going to electrify their vehicles sooner than expected, then EV sales could go up more as well. Incentive programs are very important as well. Here in the Netherlands, we had a program where the government would give you 4,000 euros back if you bought a new electric vehicle. So if countries are going to do that more and more, EV sales are going to go up, of course, as well. And also, if all the major auto original equipment manufacturers are going to commit themselves to electric vehicles, well, that's something very good as well, of course, right? And then the last part, further EV cost reductions with advances in battery technology, which is something we saw at the last presentation done by Tesla, for example, right? Elon Musk said that they want to make a Tesla that costs only $25,000, which is pretty insane. And they also introduced a new battery technology. So all these tailwinds, they could mean that the electric vehicle adoption actually comes faster than they are expecting right now. Now let's take a look at how ChargePoint has been scaling over time, okay? Here we can see that, well, they're scaling basically in two ways, at least two ways. First of all, the amount of countries that they operate in. And secondly, also the amount of applications that they provide, right? First, let's take a look at the scale in countries. So basically, we have 4 parts over here. We have the period from 2007 until 2012, where they basically were only operating in North America. Then we can see the period of 2013 until 2016, when Canada was added as well. And from 2017 until 2020, we can see that many European countries are being included as well. And if we look at the period forward, which is of course, well, 2020 and forward, we can see even more European countries being added. And by the way, just a quick side note, I was actually wondering how many charging stations they have in the Netherlands, which is surprisingly low. They only have 2 at this very moment, at least if I'm not mistaken, because I went to their website to look at this map over here and filtered on the network ChargePoint. And as you can see, there are many charging points in North America, of course, not so many just yet in Europe. But if we zoom in on the Netherlands, it takes a while, you can see that there are basically only 2 charging stations right here in Amsterdam. So yeah, that's not a lot, right? Because, well, I think that they can scale a lot more in the Netherlands, in countries in Europe as well. Okay, so let's go back to the presentation, because apart from the skill in countries, they were also focusing on skill in applications, right? In this first period, from 2007 until 2012, they were mainly focusing on the commercial applications, right? But after that, in 2013 until 2016, they also looked at the residential applications. And what is also interesting to see is a little, well, it looks like a spoiler alert over here in the column of forward, so the period of 2020 and forward, is that they want to enable strategic acquisitions. So a little spoiler alert for us, the investors, I suppose, that they are likely to acquire other companies to grow even faster that way. Okay, and then let's take a look at their business model, which is on page 14 over here. ChargePoint says that they sell hardware, recurring software, and services as well. So if you take a look at the hardware, well, that's basically their charging stations, right? If you look at the software part, the recurring software part, then you can see that they have software as a service. They have annual subscriptions, which are basically these ones: vehicle scheduling and fueling optimization subscriptions, but also energy management subscriptions as well. And I especially love the part of the recurring revenue, because you don't need a lot of capital, but you do have a very basic income stream, a very basic revenue stream. It's almost like Netflix. You pay a few dollars per month. It doesn't feel a lot to us, the people who pay for that. And we like what they offer to us, so we don't cancel our subscription. Well, ChargePoint is going to do something similar, only with software subscriptions and also warranty subscriptions, right? Because apart from the subscriptions, we can also see that they are going to provide professional services, which are under the part of these services, for design, build, and construction. But also they have these like warranty subscriptions, these annual subscriptions for parts and labor warranty. Okay, that's it for the market and the business model. So let's do a super quick technical analysis within 1 minute, okay? I promise you. So right now, 14:30, beautiful time. What we have over here, if we just look at the chart, if we just look at the daily candlesticks over here, we have a shooting star, which is usually a bearish sign. We had major rejection from this resistance over here. There's still a pretty big gap between price action and the 55 EMA, this white line over here. If we take a look at the RSI, we also see that it's still below the exponential moving average. If we take a look at the stochastics, well, the faster reacting blue stochastics is still below the pink one, so that's probably bearish as well. And the MACD, the blue MACD, is still below the orange signal line. So personally, I'm just waiting to see if it comes down a little bit more. For me, 13.35 would be a very nice price point to get in. All right, that's going to be it for today. So we've taken a look at the markets, we've taken a look at ChargePoint's business model, and we've also done some quick technical analysis. I want to thank you for watching, and please don't forget to subscribe so you don't miss the next video about ChargePoint. All right, see ya.